Let's now proceed with audit planning. So we're done with pre-engagement activities, meaning you already, let's say you assume that you already accepted the client. Then the next step is to plan the audit. So in audit planning, we said before during our introduction that we look into the nature, timing, and extent. So we plan. So in planning, generally, what we do is we try to connect a particular audit strategy or objective, and we align that with our plan. And in the end, we want that our auditories must be in acceptable low level. So let's start with audit planning. Audit planning involves the establishing of the overall audit strategy for the engagement and developing an audit plan in order to reduce the audit risk to an acceptable low level. Take note, the main thing that you need to consider in your audit is always have a low-level audit risk. So what we want here is to connect the strategy with our plan. And what is the overall audit strategy? Overall audit strategy sets the scope, timing, direction for the audit, and that guides the development of a more detailed audit plan. If you still remember before, when we started our lectures for auditing theory, we said that we look into each audit strategy, and we align it with our audit plan. And when we discuss your audit plan, we said we look into the nature, timing, and extent of what? Your risk assessment procedures and your further audit procedures. Always remember, for risk assessment procedures, you're just assessing the risk. And for further audit procedures, you're now responding to the risk. So again, here you're assessing the risk. Here you are already responding to the risk. So in your audit plan, again, it addresses the various matters identified in the overall audit strategy. So in your overall audit strategy, you look into the nature, timing, and extent of both RAP and then further audit procedures. So you already know the difference between nature, timing, and extent. So, diba, you have audit objectives. If you still remember, hope you still remember this. You align that with your procedures. So your audit objective is placed under your overall audit strategy, and your procedures is placed under your audit plan. Now, for your audit plan, nature, again, this talks about the purpose of your audit procedure and also to the type. When we say nature, whether you are doing that particular audit procedure at risk assessment stage or pre-engagement activities, or during substantive testing, or during completion. And then for type, that those are the different kinds of audit procedures. We talk about tracing, vouching, etc. And take note, the end result of this should be a low risk level or low audit risk. Now, for risk assessment procedures, part of risk assessment procedure is the understanding of the entity and its environment, and the assessment of the risk of material misstatement. So for your RAP, this is for determination of risk. So we understand the entity, and then we assess the risk of material misstatement. And your risk of material misstatement comes from your inherent risk based on your understanding, and control risk, again, based on your understanding of the internal controls in place. So audit planning. So for audit planning, what is our objective? So the objective here is that the audit will be performed in an effective manner. But take note, we just want a guide in the conduct of our audit. But take note, this guide also is not, let's say, it can be changed, meaning it is not pro forma that you will always follow that guide, because audit planning process really is continuous. It is continuous. When we say continuous, it can keep on it keeps on changing depending on the circumstances of your audit for the nature, timing, and extent. But again, it helps to lay out your audit. The nature of your audit planning. Planning again is not a discrete phase. It is continuous and iterative process that often begins shortly or after in connection with the completion of previous audit and continues until the completion. And again, we said audit planning that is not pro forma, it is not discrete, meaning it is continuous. You can always change your plan in response to your uh, risk assessment procedures. And then when do you plan? You start the planning before field work starts. So when the auditor is gathering information about the client and its environment and designing its overall audit strategy and audit plan. Again, before field work, meaning before you do your different audit procedures. And then factors that affect planning. First, the size and complexity of the entity, any changes in circumstances, the auditor's previous experience, and the composition and size of the audit team. So first, size and complexity of the entity. So based on how big or small the entity is, or whether the entity is listed or not, that could affect the planning of our audit. If there are changes in the circumstances, let's say initially you said that the internal controls are working effectively, but upon understanding the entity, internal controls are not working effectively. Therefore, you will change now your plan. And then the previous experience. So let's say that is a recurring audit based on your previous experience. You already know certain items or facts out of the entity. Therefore, your audit plan or your planning will change, or it will be shortened. At the same time, as to the size of your audit team, you can determine or you can plan properly depending on how many or the how many or how much is your resources as to the firm or the audit entity. And then what are the benefits of planning? First, of course, attention is devoted to important areas of the audit. So you can already determine based on your audit objectives. And then you look into potential problems. Main, of course, is that the audit is performed in an effective and efficient manner. That means that it is properly organized, staffed, and managed, and it can be completed expeditiously. Also, it can help in assisting the selection of your engagement team members, especially once you properly understand the entity and the assignment of your work. Again, planning also means staffing. You look into the resources of the entity. It also facilitates the direction and supervision of your work. It assists in the coordination of work and the utilization of the experience of your staff. So what are your planning activities? So based on your audit strategy or your different audit objectives, you understand the entity, you assess the risk of material misstatement. So these are your risk assessment procedures, and you also determine the materiality to create your audit plan. Now, in determining your materiality, actually, there are two types of materiality. So your materiality can either be materiality as to your FS, that could be as a whole or per assertion. And you also have your materiality or your performance materiality. So later we will discuss those items. So materiality, FS or assertion, and then your performance materiality. And again, you consider your materiality during your planning to determine the risk of material misstatement and the nature, timing, and extent of your audit procedures. And we already said that. Now, for audit strategy. We start first with audit strategy. Again, this is how we will discuss the whole planning activities. We start with this one, and we understand the entity. We assess our OMM. We determine materiality, and we have your risk assessment procedures. Then we can now create our audit plan. So let's start first with audit strategy. So audit strategy, what are the components of your audit strategy? The first component of your audit strategy is to identify the characteristics of the engagement that define its scope. So again, characteristic of the engagement that defines the scope. So generally, for characteristics of the engagement, the main things that you look here is the framework, whether we have the proper framework, the coverage of your audit, any other extra agreement or external agreement. Let's say you will use the work of an internal auditor, whether you will use the work of an expert, etc. Next, we ascertain the reporting objectives of the engagement to plan the timing of the audit and the nature of the communications required. So this talks about the reporting objectives. This talks about the reporting objectives. And then we also consider factors that are significant in directing the engagement team. So here, this talks about direction of engagement team, and then considering the results of your pre-engagement activities. And then lastly, ascertaining the nature, time, and extent of your resources. So why do we do this? So again, we said based on your audit strategy, it sets the scope, timing, and direction for the audit and guides the development of the detailed audit plan. What are the benefits? It provides for the resources to deploy, what resources to allocate, when these resources are to be deployed, and how such resources are managed, directed, and supervised. So again, we already emphasized this one. During your audit planning, generally, we look into our resources. We look into on how we will efficiently and effectively use that particular resource. Let's start first with the first item of our audit strategy. That is your characteristics of the engagement. So characteristics of the engagement. First item for the characteristics of the engagement, the financial reporting framework. Again, that is very important because without a financial reporting framework, meaning we don't have a suitable criteria. Next, industry-specific reporting requirements. So let's say if that is a bank, if that is a non-bank, if that is a financial institution, there are separate reporting requirements needed for those items. And we look whether we can provide also those items. Next, the coverage of the audit. So whether we will only audit the parent or we will also audit the components. We look into the control relationship between the parent and its components, the extent to which components are audited. You already know that. We already talked about the audit of a component, the nature of the business segments to be audited, whether we need an expert or not, the reporting currency, if ever there is a foreign currency, the statutory audit of standalone financial statements, the work of internal auditor. And when do we consider the work of internal auditor? Internal auditor or internal auditing can affect the scope of the external auditor's audit of financial statement by decreasing the auditor's need to perform detailed tests. So it already affects the nature, timing, and extent of the audit. So let's say you use the work of internal auditor for the controls, whether the controls are working effectively or not. Therefore, that changes now the nature, time, and extent of testing the controls. Because if ever you will rely on the work of the internal auditor as to whether the controls are effective or not, then it means you do not need much to test those internal controls. You just test the competence of the internal auditor. You test whether you can rely on the work of the auditor, and then if you can rely, then you can now forego the testing of those controls. So how do we consider the work of internal auditor? So you assess first the internal auditing. So you test the competence of the internal auditor, the objectivity, the professional care, and the function of the internal auditor. And then you also evaluate and test the work of internal auditor. Now, if you consider the work of the internal auditor, what is the effect? Take note, the auditor has the sole responsibility for the audit opinion expressed, and that responsibility is not reduced by the use of made of internal auditing. Take note, you only use the work of internal auditing just so that we can reduce the nature, timing, and extent of our further audit procedures or our audit procedures. But it does not decrease the responsibility over the opinion that will be given by the auditor. Other considerations for the characteristics of engagement, whether we need to use the use of service organizations. So let's say you are to check employee benefits, whether you will use the work of an expert as to the employee benefits. So let's say actuarial or actuaries, the use of evidence obtained in your previous audits in case of recurring audit, the IT, the coordination of audit work, and the availability of client personnel and data. One thing that is hard for audit strategy or audit planning is it asks you which of the following are or is part of the characteristics of the engagement. So you need to know all of these items. So again, for characteristics of engagement, the main consideration here is the scope of the audit work and the resources needed for that audit work. Next, ascertaining reporting objectives. This talks about reportorial requirements. Therefore, what are the things that we consider? First, the deadlines or timetable for the reporting, whether that is interim reporting or final reporting, deadlines for the meeting with the management, the expected type and timing of the reports, expected communication, communication with auditors of components, communications among team members, and communications with third parties. Therefore, if part of the question is audit strategy reporting objectives, take note this talks about reportorial requirements or any communication. Reportorial requirements or any communication. Next, part of our audit strategy, that is your significant factors in directing audit engagement team. So for significant factors directing audit engagement team, this talks about how we will um, direct or how we will make use of the resources for the engagement team. So what are the considerations? First, preliminary identification of areas where there may be a higher risk of material misstatement. So why do we need to understand those items with higher risk of material misstatement? Because these items generally are already technical. So when we say technical, not all items or engagement team members can audit these items. Only select few, only trained individuals. Therefore, once you determine that this item is higher ROMM, therefore you need an experienced team member to conduct that particular audit. And the question is, what are the items with higher ROMM? Always remember these items kasi laging lumalabas to. May apat tayong areas with higher ROMM or risk of material misstatement. First, significant non-routine transactions has higher ROMM or there is a higher risk of material misstatement. Why is it with higher risk of material misstatement? Because generally, your controls are placed for routine transactions. Controls are placed under routine transactions. And since in your non-routine transactions, generally, there are not much of controls placed. And since there's no controls placed in your non-routine transactions, it means that the risk of material misstatement there is high. Again, non-routine transaction has a high ROMM just because mostly your controls are placed into your routine transactions. Hence, for non-routine, generally, wala masyadong controls. And since wala masyadong controls, mataas ang risk of material misstatement. So greater management intervention to specify the accounting treatment for non-routine transactions, greater manual intervention for data collection and processing, and complex calculations on accounting principles. Next, significant judgmental matters. Why is this higher ROMM? It is higher ROMM because there's no standard. Walang standard dyan. Kaya ang ginagamit mo lang is purely judgment. So since purely judgment, ang hirap itest kung tama yung judgment niya or hindi. Kaya higher yung ROMM niya. So ano ba yung mga judgment matters? First, accounting estimate. Kung tama ba yung pag-estimate niya sa life, halimbawa, kung tama ba yung pag-estimate niya dun sa kanyang residual value, etc. Those are purely judgments. And again, since there's no standard, then we have higher risk of material misstatement on these judgments. Next, on your revenue recognition. Some items still use judgment for revenue recognition. Take note under PFRS 15, what is included therein is that you can depart on the standard if it can provide for a more reliable information. Therefore, once you depart, meaning you do not use the standard but you use judgment. So a common example is you can still make use of installment reporting as to installment sales because again, it can provide for a more reliable information. It does not bloat up your sales or your revenue. And again, based on that, you check if ever there are controls in place for that significant judgment. Next, any required judgment may be subjective or complex. It is more of an assumption. Therefore, it is very hard to audit. Next, special audit considerations. We have your related parties and your going concern assumption. For related parties, it's very hard to audit related parties because you check whether there is a related party or there are transactions between those related parties. Because normally, entities does not really provide for proper disclosure requirements for related parties. And then going concern assumption, another one very hard to audit, just like what happened before during the pandemic. Most of the audit reports says that entities will continue in a going concern assumption, but pandemic happened and then suddenly businesses closed down. Therefore, they are now in liquidating concern. So imagine how hard it is to audit if ever the entity will continue or not. So we look also into the sustainability of the entity because generally we do not only look into whether they follow the PFRSs. We also look whether they follow now the sustainability standards because we have now sustainability standards. And then lastly, fraud. Take note, it is higher ROMM because again, you are now concealing. This is more of a deliberate intent. So these items requires higher focus. We place experienced team members here for these items. So what are those items again? Non-routine transactions, judgmental matters, related parties, going concern, and fraud. Next, the impact of accessories of material misstatement at the overall financial statement level on directing, supervision, and review. Next, determining the appropriate materiality levels. So based on your materiality, we determine um, if ever we need an extensive or less extensive audit work, the manner in which professional skepticism is emphasized to the engagement team members, the commitment of the management to internal control, the volume of transactions, the importance attached to internal controls, any business developments affecting the entity, any industry developments, changes in financial reporting framework, or significant relevant developments. Why are these items considered as significant in the direction of your engagement? Because here in your business developments and industry developments, if there's new standard, generally it means that not all engagement team members can do that audit work. Therefore, it affects the direction of your engagement team. Take note, in this audit strategy, we look into the proper staffing. So our problem here, there's a development in the business, meaning hindi lahat ng bagong or hindi lahat ng engagement team members understood agad yung business development na yan. For sure, yung mga experience lang yung makakaintindi agad. Therefore, kailangan mo ayusin yung staffing mo or yung engagement team members mo pag nagbago yung business development or nagdevelop yung business. Or pag nagdevelop din yung industry, let's say nagbago ng standard, mga ganon, then normally, experienced team member ang agad makakagets niyan. Kaya magbabago na naman yung staffing mo, magbabago na naman yung direction of your engagement team. Again, here, ang main consideration nyo lang dito, there is a change as to your staffing requirements or your resources. because take note, you are directing the engagement team. The main item here to discuss is those items with higher ROMM. Do not forget the five items: non-routine, judgmental, related parties, going concern, and due to fraud. Itong audit consideration kasi, hatiin nyo na agad kasi baka makalimutan nyo pa kung ano yung mga special audit consideration. So, limahin nyo na lang: non-routine, judgmental, related parties, going concern, and fraud. Next item is still materiality. So we said earlier that we consider materiality for our audit or the direction of your engagement team. Earlier we said we look whether if that is lesser and lesser or more extensive. Yun yung tinitingnan natin kung kailangan natin ng lesser or more extensive depending on our auditories. So materiality, what is materiality? Information is material if its omission or misstatement could influence the economic decisions of users taken on the basis of the financial statements, meaning some matters but not all are important in your decision making. So hindi lahat ay material. Hindi lahat ay material. So when do we consider materiality? Earlier, we said we can already consider materiality in planning, but also we can consider it for testing and for completion. Now, what are the materiality levels? We discussed this earlier, medyo pahapyaw nga lang. Your materiality can be for FS or per assertion level, and we can also have performance materiality. First, for FS, this is the aggregate level that could misstate, distort any of the financial statements. The other terms here are materiality threshold, planning materiality, or overall materiality. And then we also have your materiality at assertion level. This is your tolerable misstatement allocated to an affected account. So these are level or levels for a particular class of transactions, account balances, disclosures, if applicable. So let's say for AR, naglagay ka ng materiality na 50,000. And then sa FS, let's say naglagay ka ng materiality na 200,000. So eto, lahat ng total misstatement mo, kailangan hindi mag-exceed ng 200 kumbaga. And then, for AR, ang material sa'yo ay 50,000. Also have performance materiality. These are amounts set by auditor less than the two materiality levels to provide margin to reduce the possibility of undetected misstatements. So this is lower, okay? Lower than the FS and assertion. So how do we document the materiality? Your documentation should include the amounts of the materiality and the factors considered in their determination. So take note, we have two materiality, FS as a whole, and for your assertion level. Ultimately, you need to provide a lower level for FS and assertion, so we provide performance materiality. And if in case you will revise your materiality levels, then you also need to document it. So again, what are the items to be documented for materiality? The consideration for the amount, the determination for the amount of the materiality for FS as a whole and for assertion level, including performance materiality. And if in case this materiality will be revised during the course of the audit. Next item of your audit strategy. Again, there are five items. The first one is the characteristics of the engagement. If you still remember characteristics. The second one is the reporting objectives. The third one is for the direction of your engagement team. Now we're under the fourth and the fifth part of our audit strategy. Fourth, consideration of the results of your pre-engagement activity. So, what are your consideration? The results of your previous audit regarding evaluation of internal control, weaknesses, and action taken to address them. So, assuming that is a recurring audit, if you already provided some conclusions or uh, some items that should be done on the internal control and whether those items were already affected by the entity. Next, the discussion of matters that may affect the audit with firm personnel responsible for performing other services to the entity. So if in case there are firm personnels that provides other services to the entity. So assuming one entity provides for let's say budgeting or forecasting to that entity, then you check the effect of that as to your audit strategy. And then lastly, ascertaining the nature, timing, and extent of resources. You now select the engagement team. You now assign the audit work to team members, and now you budget your resources. So those are the 5 items of your audit strategy. Again, characteristics of the engagement, reporting objectives, engagement team, consideration of pre-engagement activity, and ascertainment of your nature, timing, and extent of your resources. Now, after we finish your audit strategy, we said we now understand the entity and assess the risk of material misstatement, or we do our risk assessment procedures. So, risk assessment procedures. So, again, first, based on your audit strategy, we do your risk assessment procedures, which is composed of your understanding of the entity and then the assessment of risk material misstatement. Aside from that, you will now determine the materiality to create your audit plan. So we're done with your audit strategy. We go now to your risk assessment procedure. First part of your risk assessment procedure is the understanding of the entity. So in your understanding of the entity, what is to be understand? You understand any internal or external factor over the entity. For external factor, we look into the industry, the regulatory body, and the reporting framework. For internal factors, you look into the nature of the entity, the selection and application of accounting standards, and any internal control. Now, the next question is how to understand. Generally, there are 3 phases of audit, right? So we have your risk assessment procedures, we have your substantive testing, and then we have now your completion. So this is during your planning. We have your audit trifecta or your IOI. I already told you this one. So we have your inquiry, observation, and your inspection. And aside from inquiry, observation, and inspection for your planning, we also have analytical procedures and analytical procedures. This is required under planning and completion phase, but not required under substantive test. But in every phase, merong IOI. So kaya ang tawag natin doon ay trifecta. Therefore, for risk assessment procedure, the audit procedures there are inquiry, observation, inspection, and then analytical procedures. Take note, analytical procedures are required under planning and completion, but not required under substantive tasks. So how do we understand? This talks about your audit procedures in understanding the entity. First, inquiries. You discuss with the management about their objectives, expectations, plans, or for achieving these goals. Another is to observe and inspect. Take note, we are just to understand the entity. You observe the activity of the entity, the operation of the entity. You inspect the documents to determine or to understand the internal control. And then lastly, we perform analytical procedure as part of our audit procedures. Now, in your preliminary analytical procedures or analytical procedures under risk assessment procedure or planning, we just identify areas that may present a specific risks and to enhance the auditor's understanding of the entity's business and transactions and to help plan the nature, timing, and extent of the substantive auditing procedures. So those are the benefits of your analytical procedures if done during your understanding or risk assessment procedures. Now, what are the basis for expectations for analytical procedures under understanding? So normally, we have your prior year's financial statement, your interim financial statement, anticipated results, relationships, averages, and non-financial information. Sir, what happens during analytical procedures under understanding? So deep sa understanding kasi, tinitignan natin yung relationship between items. And based on those relationship, we try to project a possible effect. So let's say, um, in the previous year, 40% ang iyong gross profit. So if in the current year, let's say, 100 million ang iyong sales, in short, dapat at least magiging 40 million ang iyong gross profit. Parang ganun. So analytical procedure is more about looking into the relationship between items, and based on those relationship, you try to project a possible result. So here, under analytical procedure for planning or under risk assessment procedure, we just look into possible areas that may represent significant risk, and it could also help enhance the understanding of the auditor for the business and the transactions. And then it can also help plan the NTE of the audit. So analytical procedures. So analytical procedures are evaluations of financial information made by the study of plausible relationships among both financial and non-financial data. Sabi ko nga sa inyo, you look into relationships, and based on those relationships, you try to project or create an effect out of that relationship. So the basic premise underlying the use of analytical procedures is that plausible relationships among data may reasonably expected to exist and continue in the absence of known conditions to the contrary. So you project based on those relationships. The purpose is to assess the overall reasonableness of account balances and transactions. And take note, analytical procedures can be under risk assessment procedures or planning, substantive tests, or completion or overall review. Sabi natin kanina, required siya sa planning, required sa overall review, but it is not required under substantive tests. Here, I just place here the different purposes of your analytical procedures per item. Let's start first for planning. For planning, to enhance understanding, to identify specific risks, and the nature, timing, and extent of further audit procedures. We're done with that. Substantive tests, to evaluate the reasonableness of financial information, corroborative evidence only, corroborative, and detect material misstatement. Again, it is not required under substantive tests. And then overall review, to identify unusual or unexpected account balances and determine whether or not the auditor has the ability to issue the report. So those are common purposes for the different phases of your audit. Again, for planning and overall review, analytical procedure is required, while for substantive tasks, it is not required. Next part of your risk assessment procedure, we have now your ROMM. So under ROMM, we identify the risk of material misstatement, and we said under your risk of material misstatement, that is composed of your inherent risk and your control risk. Now, so your inherent risk and control risk creates your ROMM. ROMM multiplied by your detection risk, you should have a acceptable low audit risk. Therefore, audit risk is equal to ROMM multiplied by your detection risk. And ROMM is composed of IR and your control risk. So generally, we said before that we can only adjust our detection risk. So we can have a lower detection risk or a higher detection risk. And based on that lower or higher detection risk, it provides now for the nature, timing, and extent of your audit procedures. Nature again, take note, we look whether we will make use of a particular audit procedure or not. Timing, whether we can conduct the procedure at interim or year end. Extent, whether we will use larger sample size or lower sample size. So based on the relationship of inherent risk and control risk for your ROMM, then it provides for the relationship whether we have a lower DR or a higher DR. Take note, if the ROMM is high, then your DR should be low. If ROMM is low, your DR should be high. Why? Because we would want a lower audit risk. We would want a lower audit risk. And in those relationships, then we can have a lower audit risk. Now, what if we want a lower DR? If we want a lower DR, the nature, timing, extent is as follows. First, for nature, more effective procedures will be applied. The timing, it must be on year end, and the sample size is large. If we will use a higher DR, we use a less effective audit procedure. It is performed at interim, and we use a smaller sample size. Finally, we place here that there is an inverse relationship between materiality and level of audit risk. That is, the higher the materiality level, the lower the audit risk, and vice versa. So, what do we mean by that? It means that the higher the materiality, there is a lower risk because the auditor has a less risk of not finding something that is material. So, we say that, let's say this is your materiality. Okay. Let's say this is your materiality. 1 million. Let's say that is your materiality. So you are saying that there is no mistake, there is no mistake larger than that materiality. So if there's no mistake, meaning there's no audit risk. So ulitin natin ha. Ang materiality natin halimbawa is 1 million. So pag nag-audit ka, there is no mistake higher than 1 million. So if you have high audit risk, high materiality, meaning walang mali more than 1 million, wala kang masyadong ma-audit. So you have lower audit risk. But if ever your materiality is low, then your audit risk is high. Kasi baka mas marami kang masasala na mali. Parang ganun yung ibig sabihin niya. Ulitin natin. Pag mas mataas yung materiality mo, mas mababa yung audit risk mo. Bakit? Kasi nga, sinasabi mong wala masyadong mali. So kung 1 million yan, halimbawa, pag mag-check ka, tong 10,000 di yan mali. Tong 100 na to, hindi to mali. Mga ganun. So in short, wala kang masyadong masasala. In short, wala kang audit risk. Pero, or mababa yung audit risk mo. Pag masyadong mababa naman yung materiality mo, possibly, meron kang masasala. So mataas yung iyong audit risk. So again, take note, the higher the materiality, the lower the risk. Because the auditor has less risk that he cannot find something that is material. So wala siyang masabing material, kaya wala siyang masyadong risk. Kasi masyadong mataas eh. Ulitin natin pag halimbawa 1 million, masyadong mataas yan, pag mag-check siya, wala siyang masasabing, uy, material to. Therefore, wala siyang masasabing risk. So there's no audit risk. Pero pag mas mababa yan, mas marami siyang ma-check. So since mas marami siyang ma-check, possibly there's a risk. Kaya high yung risk niya. Inverse ang relationship ni materiality at audit risk. Okay, hope naiintindihan nyo yan. Inverse relationship of materiality and audit risk. Kasi tinitignan natin yung masasala niya. Dito, walang masyadong sasalain, therefore, wala kang risk na ma-check masyado. Dito, masyadong mababa, mas marami kang sasalain, and since may audit ka na, possibly there is an audit risk. Next, we identify and assess. So we identify at FS level and at assertion level. So FS level, FS as a whole. Assertion level, based on your account balances and transactions. And again, we have materiality for these items. We have FS materiality, and we have also transactions or assertion level materiality. And we assess the risk, whether it is significant or insignificant. And when can we say it is significant risk again? It is significant risk if ever it has a higher ROMM. And meron tayong may limang item tayo with higher ROMM. Ano na uli yung limang item na yon? Kasasabi lang natin kanina. First, if ever there is a non-routine transaction. Next, judgmental matter, going concern, related parties, and fraud. So if ever, doon yun, laging higher yung ROMM natin. Ulitin natin, higher ROMM sa 5, non-routine, judgmental, going concern, related parties, and fraud. Now, low level of audit risk. Halos nandun na tayo sa huli. Kasi nga, yung sabi natin kanina, di ba? Based on your audit strategy, you now understand the entity or you do your risk assessment procedures. And your risk assessment procedures, that is understanding the entity, and at the same time, you assess now your ROMM. Also, you assess your materiality. We're done with understanding, sabi natin, that is IOI plus analytical procedures. We're done discussing ROMM, that is inherent risk, and then we have your control risk. We're done discussing materiality. We said that is materiality based on your FS as a whole or assertion plus your performance materiality. And we already discussed the relationship of audit risk and materiality. If audit risk is high, materiality is low. If your audit risk is low, materiality is high. Kasi nga, tinitignan natin yung sinasala niya. So, kung masyadong mataas yung materiality mo, wala ka masyadong sasalain, feeling mo walang masyadong material, then yung risk mo na mag-provide ng maling opinion ay mababa. Pero if ever you have a low materiality, your audit risk is high. And we already discussed that. And after risk assessment process, meron na tayong audit plan. So, andito pa rin tayo sa risk assessment process. So, lower level of audit risk. So, the audit risk is a matter of professional judgment. And take note, we look into or we adjust only the detection risk, whether it is lower detection risk or higher detection risk. If that is lower detection risk, ibig sabihin, gusto natin extensive. Okay? Extensive. So kung extensive yan, sabi natin, madaming sasalain. Kung madaming sasalain, ibig sabihin, ang materiality natin ay mababa. Sa higher detection risk naman, less extensive. So, konti lang yung ating sasalain. Ibig sabihin, mataas yung ating materiality. I hope naintindihan nyo yung effect ng materiality as to risk, audit risk itself, and yung detection risk. So, sa audit risk, inverse ang relationship niya. But as to detection risk, direct yung relationship niya. So first, lower detection risk. The NTE is first nature, more effective, timing, year-end, extent is larger sample size. Materiality, lower materiality. Bakit? Kasi nga, mas marami tayong sasalain. Pag marami tayong sasalain, ibig sabihin masyadong mababa yung materiality mo. Pero kung konti yung sasalain mo, ibig sabihin mataas yung materiality mo. Okay? Higher materiality, higher detection risk. And the nature of your audit procedure is less effective. Timing is interim or several dates. And then the extent is a smaller sample size. Again, pag audit risk inverse, pag detection risk direct, that is as to the relationship on your materiality. I hope na understand ninyo yan. Next, we now create our audit plan or audit program as last part or last item for our audit planning. So first, audit strategy, right? We create based on the scope, timing, and extent. We create an audit plan. This now provides for the nature, timing, and extent of risk assessment procedures and further audit procedures. And then we create now our audit program, which is a detailed audit procedure. So this is now the execution of your audit strategy, which contains audit objectives, nature, timing, extent, and the time budget for each procedure. So what are the factors that affects the nature, timing, and extent of our audit plan? So less extensive if that is a small entity, simple transactions, recurring, little or no changes, and normally after year end. More extensive planning for a large entity, judgment, and estimates, new audits, significant changes, and before year end. I think we do not need to discuss this anymore because we have discussed it already earlier. So take note on the difference of the three: audit strategy is scope, audit plan, nature, timing, and extent. Audit program is detailed audit procedures. So audit strategy, scope, timing, and extent. Audit plan, the nature, timing, extent. Audit program, that is your detailed audit procedures. Other planning considerations: first, modification of your overall audit strategy and audit plan. Again, we said audit plan is a continuous process. It is not a discrete process. We also plan the nature, time, and extent of direction, supervision of the engagement team members, and review of their work. We already discussed that earlier as other consideration. Look into the work of an expert or other auditors if in case for our consideration. Discussing the planned audit procedures with the client management. Again, what is allowed is the planned audit procedures. So allowed, but discussion should not compromise the effectiveness of the audit. And then lastly, the documentation of your planning activities and what can be documented: overall audit strategy, audit plan and program, changes in that strategy, plan, and program, the discussion, elements of understanding the entity, the ROMM, and the risk identified and its related controls. Before we end, let's just recap what we have discussed for this topic because it is quite extensive already. So let's make use of our earlier discussion or earlier slide. So we go back to that. So under planning activity, we start first with your audit strategy. And we said under audit strategy, it is composed of 5 items. First, we look into the characteristics of engagement, reporting objectives, and then we have also your engagement team, directing the engagement team, and then we also have your results of pre-engagement activities, and then NTE. And then we go now for your understanding the entity. For understanding the entity, take note, you just perform your audit procedures, IOI plus analytical procedures. And then ROMM, we look into your IR and your CR and the relationship of IR and CR to our DR. If ROMM is high, DR is low. If ROMM is low, DR is high. Also, we look into the relationship of your materiality. And when we talk about materiality, these are your materiality at FS as a whole or assertion level. And then we also have performance materiality. Take note the effect of your materiality as to your audit risk and as to your detection risk. Audit risk, inverse relationship. Detection risk, direct yung relationship niya. And na-discuss na natin yan kanina. Now, after you finish your risk assessment procedures, you now create your audit plan. Take note, for audit plan, what is provided is the nature, timing, and extent of audit work. Nature, timing, and extent. While for audit strategy is scope. Okay? Sana hindi nyo makalimutan yan. Tapos pag audit program yan, yan yung more detailed, meaning nakalagay na yung ating different audit procedures. Okay? So that's it for our planning activities. If you can just capture or you can map out on your mind the whole planning process, then it could be easier for you. Medyo marami lang dito sa audit strategy kasi maraming considerations. But after that, madali naman ang intindihin yung other items such as yung ating risk assessment procedures. Okay, after risk assessment procedures, the next is, of course, now is your responses to assess risk. So that is test of controls and substantive tests. So that's it for this particular session.